Yo, this week was an insane trading week, man. Across gold, there was literally 4 potential buys that gave a 1 to 18, a 1 to 22, a 1 to 17, and another 1 to 23. So let's get into a full case study, a full breakdown, and exactly how we took these trades and exactly how you can take the same model and start to apply it in your trading. Now, these trades were called inside of my live trading community. So if you do want to be part of that, go down to the description and join today. But with that being said, let's get straight into the video. So when it comes to this position on gold, right? First things first, why was I even looking to buy this market? Let's go back to where we was on Tuesday. So why, like, obviously when you look at this market, right, you might be thinking, oh my God, Kieran, it's a downtrend, right? You've got higher high, higher low, higher high, lower low, lower high, lower low, lower high, lower low. Why are you not shorting this FVG? Why are you not selling this order block? Why are you buying? Well, firstly, we don't pay attention to highs and lows. We look at Wyckoff schematics. So what I do with my trading plan is I identify a Wyckoff schematic. I have to learn to validate them. So I'm either looking at accumulations or reaccumulations. And if we were to even bring this up on a little photo for you so you can see, obviously this is our price cycle, right? If it's bullish, you see accumulations and reaccumulations. And obviously if it's bearish, you're going to see distributions and redistributions. So all I was doing here was looking for a schematic and then waiting for that schematic to mitigate. But for me, the key was understanding the economics behind this, because sometimes you can get fake bullish price action where the market can look like it's, it's a bullish order block or look like a schematic. But if there's no reason for buyers to step in, it's never going to play out. Like, why is this downtrend not going to play out? Because there's no economic reason for sellers to come into the market. And what's the whole economic reason for buyers to come into the market? So why are we looking for buyers to continue coming on gold? Because right now what we're seeing is a quantitative easing cycle in the market, which basically means risk assets like gold, crypto, stocks are going to be bullish for the foreseeable future. Because what we're seeing right now, yes, we've seen a small cool down in the economy, but what that's doing is causing the Federal Reserve, the central bank, to want to cut their interest rates. And them cutting interest rates basically stimulates the economy and causes these risk assets like your cryptos, your stocks, your metals to continue to absolutely rally. Now, of course, I don't want to spend too much time on economics here today. I want to focus a little bit more on the technicals, but me understand that we might get rate cuts in September, and obviously looking at what's happening with the labor market, knowing that inflation's coming down and the labor market's cracking, are all signs that rate cuts are going to be coming. And if these rate cuts do happen, this is very bullish for these instruments. But recently the labor market data did get revised, which showed that the labor market is cracking, and that's why Jerome Powell, obviously the Federal Reserve chairman, he's now talking about cutting rates, because before he didn't want to cut rates because the economy was so strong. But that data got revised and the economy wasn't as strong as what the data suggested. So now there's a lot of pressure to cut rates because this economy is cracking. And obviously the Fed don't want another recession like happened in 2007, 2008, because interest rates were so high back then, it caused that economy to collapse. And that could happen if rates don't come down. Because rates are coming down, that's why we're looking to obviously continue buying this. So I obviously had a higher time frame POI. I did have a higher time frame zone here, right? But in order for it to come down to this higher time frame zone, it needs to break the lower time frame market cycle, which my lower time frame market cycle is still being maintained from here, because this is my last reaccumulation that maintains my leg. So when price comes back into it, we're looking to see if we can see another lower time frame accumulation, one of these. Because once you see this accumulation occur, you're actually seeing evidence of these bigger players filling their orders. Like, a lot of times people are like, oh my God, let's say they're looking at, to try and buy, and they're like, oh my God, right? Lower low, lower high, lower low, downtrend. They're like, oh, break a structure, it's bullish, let's buy it. And they're wondering why these buys are losing is because the bigger players have not filled their orders yet. Like, what you got to understand is that the only reason price moves is because of bigger players. Like, I'm talking your banks, your hedge funds, these institutions who are dealing with billions and trillions of dollars. And because they're trading so much money, they can't come in like us and just fill, 20 contracts or 20 lots or something like that. They have to split their order up. So when a bigger player is going to get involved, they're not just going to do this, right? They're going to build out these accumulations and build out these schematics. So to the average person, it's, oh my God, it's a consolidation, nothing's going on. But that's how the bigger players fill their orders. They cause the market to consolidate, manipulate lows, and then break to the upside. So you're getting wicked out of your trades before the real move occurs because you're not validating the schematic correctly. Like when I look at this, this is just phase A. So if we go back to our schematic, phase A stops the trend. Phase B, consolidation, time passing. Right? So we've now gone into phase B where the market's consolidating and going sideways. And you're trying to buy in here because you've seen a break of structure or a fair value gap or some shitty smart money concept, right? But for me, we know this is phase B, so we'd wait for potentially phase C and a sign of strength. But what happened? The market obviously collapsed and it never continued strength at that point. But coming down here, we saw the market print out our beautiful accumulation. Again, you got a nice trading range. Again, if we even put them, even if we want to put them closer together, you can see we build that trading range, we get those manipulations, and then we get that sign of strength to confirm it. So upon that sign of strength, I can come in, I can measure out my manipulation, go ahead and set my limit order, and then zoom out. Obviously, it didn't hit our stop loss because that's our line in the sand, right? And then we obviously can now zoom out to our higher time frame targets, which is obviously just higher this leg. Now, obviously, doing a full top-down analysis, you know, it is definitely a higher chance that we can go and create all-time highs as well on gold at 3,500 because, again, economically we're bullish, but we're also in this higher time frame bullish leg. So knowing that we've come down to mitigate, we're going to look to now play this to new highs. So how I manage this trade, obviously I take partials, right? Even though, yes, it's a 1 to, what was the risk reward? It's like around a 1 to 20, 1 to 18. I'm not going to hold full volume to these highs, right? I'll pay myself volume as price continues. Now, I typically will take 3 main or 4 main partials on a trade, where I'll take one at a devil's advocate zone, which, for example, here, right, my supply zone. You know, as price came into my supply at my 1 to 10, you know, I paid myself 25%. Once it then hit my main target at those highs, I paid myself another 50%, leaving another 25% of the order remaining to see if we're gonna continue to those higher time frame targets. And then from there, we played a few more continuations throughout the week on this. We did mention there's higher time frame demand lower, but of course it needs to break what? This demand before price obviously goes lower. So seeing that we came back into this demand zone and we mitigated here, right? We could obviously go down to a lower time frame and we saw the market build out our accumulation where it comes in, builds our trading range. And in this case, we have something called a terminal shakeout, where instead of the manipulation being very close to the range, it obviously comes all the way down. And what gave me a lot of confidence to get involved with this is seeing the divergence on silver. Because if we go back at silver on the time, right, higher time frame, silver was leading, right? Silver had more strength on the day. So looking at silver, we can see that silver has already shown strength and not pulling back as much. We're seeing a lot of volume in this manipulation, which is showing commitment from the buyers. And if you look at the high from August 5th, right, on silver, already took it, gold hasn't yet. So when I saw price, given that manipulation with a volume and printed our Wyckoff schematic, and we had some nice relative strength divergence, you can see RSI going higher, market going lower. We also can see in our spring and our manipulation, huge volume. And as the market's going lower, volume's going higher, which is showing you more buyers are getting involved, right? More interest, more activity. But obviously the key with this is making sure there's follow through, because obviously if the market just does that, well, there's no follow through from the buyers at that point. So how I decided to enter on this trade, right, is I came down to a lower time frame. And again, we know our daily cycles. London gives highs or lows of the days, and we're sitting in London session. All right. So what I actually saw here, and I might have to go to the line chart for you guys to really see this a bit more clearer, but price actually printed another micro accumulation down here. All right, a little baby accumulation, invalidated minus supply, came back down to mitigate the 50%. And then as it came to the 50%, it produced another accumulation down here where it manipulates those lows, breaks to the upside. Right, again, manipulating lows, breaks to the upside. So upon that, and again at the same time, silver was showing nice strength. We opened silver. Right, silver was showing nice volume and already starting to react and trade higher. Right, that's what confirmed to me that gold's going to continue higher. So what I did is I went to set a limit order on here, and I just put my stop basically below this wick over here to the left. because price still could have swept this low as these accumulations and still been bullish, because obviously you've got to know where your line in the sand is and your invalidation point, which is down here. So I'm not going to put my stop below here because that's not my invalidation point of the trade, it's here. So that's why I put my stop here. And obviously zooming out, higher time frame targets. I mean, obviously I had devil's advocate as well. So in here, look to pay myself some volume. And obviously, again, at those highs, to pay myself some more volume. And then obviously finally at that all-time high at 3,500. So then at that point, she also gave another re-entry as well on this thing, where, again, just following the market cycle up now. So obviously we know that the higher time frame now at this point, buyers have come in, and we're obviously continuing for that higher time frame leg. What we can do is we can walk this up if we keep seeing bullish market cycle. So we know a bullish market cycle is, again, it's accumulations and reaccumulations, not highs and lows, but accumes and reaccumes. If we go back to our market cycle, right, it's those highs and lows that create these schematics. So when you come into that higher time frame POI and you've given a schematic, you can keep seeing schematics as it's going to that target you can continue looking to buy from. And that's what we saw, right? We had another reaccumulation here where it manipulates these lows, manipulates all these lows in here, and then breaks to the upside. So what I did is I measured it out, had my key zones, and then price didn't come into my 50, but it came into the high of my reload. Now, I wasn't looking for a deeper pullback in there because there's no imbalance for price to fill in here. That was the last bit of imbalance that price filled. And more importantly, what happened when it came back to this area. Because if we go down to a lower time frame, again, might have to switch to the line chart for you to see this. Right, you can see it starts to build out another accumulation down here that we went ahead and capitalized on. So all of my entries are the same thing. It's having a POI to the left and then waiting for the market to come and give me a lower time frame accumulation. And I can zoom out to that higher time frame target and keep playing this up. There were a few more re-entries a little bit later in the day. I personally didn't catch them because I was already in 2 positions. So like, there's no point, you know, trying to take multiple ones. The biggest reason why a lot of people fail is not because of a lack of winners, it's because they're taking too many losers. So for me, I'm always trying to be defensive with my trading and not aggressive with my trading, so I can preserve my capital. And at this point, I obviously closed majority of the trade. And then there was another entry actually that happened yesterday. Just scooch this back to where it was. And it was pretty much based off the same sort of thing where, again, we came into our reload, right? Our reaccumulation that caused the break of this supply, right? Price at the right time of day starts building another accumulation. Again, you can see it starts doing what? Manipulating lows, gives you a spring, huge volume, right? Massive volume absorption. So then we can dive down to a lower time frame in there, right? And then here was my entry. My P&L tools moved a little bit. After all this high volume candle, right? Massive absorption. And again, it's another accumulation, right? You can see those manipulations of lows, massive sweep, break to the upside. Now, I wasn't looking to set up a line limit off these areas because the risk to reward wasn't that good. So what I did is I waited for another lower time frame accumulation, but I just couldn't validate this larger one over here, right? I didn't meet my criteria, but what I did see, right, was this little lower time frame reaccumulation that had cause and effect and invalidated this supply over here. So I decided to take a limit on here, but I was fully aware that it could have did this and could have did that to give me my spring, because what we have right here is a type 2 accumulation, because you've got different types. So a type 2 accumulation, right, only has one manipulation. See, it has the initial range and the ST and B, We didn't have the spring. Now, it doesn't have to give a spring, but it can happen if you don't see proof of demand in these areas. So because I saw proof of demand, that's what made me want to go ahead and take this limit order off this 50. And then from there, if we zoom out for our targets, right, obviously, you know, yes, of course, you know, main target would be, you know, these highs over here. Obviously, this risk reward's not as spicy, but when I saw this volume come in and just look at how the candles are closing up, you know, if you look at that hourly closure, right, look at this 1 hour candle closure, absolute, with that volume as well, that's textbook. Massive volume spike, massive pin bar. You know, you see that at the right time of day, the right day of the week, you know, you're going to be soaring. And of course, we zoom out, right? We remember we said we're in that daily leg. We can look to also hold runners for this high, which obviously we slapped last night. And obviously now for me, I'm finished. I'm finished with gold trading. Like there's nothing else I want to do. A few of the runners, obviously, I closed majority of the volume on these things. But, you know, some of them did go to like a 1 to 68, like a 1 to 86, you know, 1 to 80. But yes, you can get these big 1 to 100 trades, and it, you know, it happens. You know, I've caught them, my students have caught them, like it happens. But obviously, you're not holding full volume on those trades. And again, just want to show you something here. Look how long I haven't traded gold for. All right, like these 4 trades in this week is a lot. I did take, ultimately this week, I did actually take 1 stop loss and 1 break even, trying to get these trades as well, to be honest with you. But before this, look at how long it's been since I've traded gold. Fucking hell, I don't even know the last time I was even trying to trade this thing. Jesus Christ, I don't even remember the last time I got a position on this. This year, this is the first set of positions I've had on gold, actually, and we're 8 months into the year. So this is what shows, you know, about having that discipline to know not only your entry criteria, but have those economics in alignment to get those stronger trades. So the biggest thing I wanted to kind of show you guys on this like video was with the volume absorption. Like if you notice, every trade we had before it reversed, look at the volume it gave, right? And when you can see the, and again, like obviously here we have same sort of concept, big spike, volume spike, market reverses. But obviously to build confluence, you want to have a narrative behind it and be with the overall trend and use the rest of the validation criteria that we obviously teach in the mentorship. This is just one confluence, but start backtesting these manipulations with this volume absorption like this and watch how many reactions you see. But remember, the key is the follow through, because if the market comes down, shoots big volume and then just drops, well, yeah, there's no buyers there, right? But if it drops big volume and reverses, this is a powerful sign for what we call absorption. And it's a very, very powerful indicator. So yeah, I'd recommend, you know, going back and back testing gold's price action throughout this week. In terms of what I'm looking for next, economics are still bullish on this thing, but higher time frame, right, we could start to pull back and rebalance. Obviously, we've now just created a new leg, right? So our line in the sand, and but buyers are in control from here. So the question is, can we now pull back to demand? So if we measure out, right, we've got 50% down here. So basically, can the market come now down to these areas and do that? Obviously, you got to check silver, right, as well. Silver hasn't actually achieved its target yet, so it's still lagging behind. So maybe what we could see going into this week, all right, is a little bit of a deeper pullback coming to demand before cracking that high, which would make the most sense. Obviously, this would cause gold to keep going higher as well, which is possible. You know, I'm not saying gold has to sell off today. It is bullish economically, but obviously my target on gold has been met. Obviously, if silver wants to come lower, it's still a possibility. If we zoom out higher time frame, silver can you know, break those and still come into here and be bullish before continuing. And this is just the power of having those higher time frame zones. And like when you're trading, emotionally accept the loss and the other side of the coin, because I used to always focus so much on my trade idea and like this moment right now, and it was the only possibility that could occur. Then I would lose, and then I'd be like, what the fuck, I just lost. I wouldn't know what to do. I'd be flustered, I'd be annoyed. I'd find myself taking 2 or 3 more re-entries and revenge trade, and fucking it would be a mess. But now what I do is I prepare for my loss. I emotionally accept the loss. I have a game plan if this trade loses, and I know where price can retrace to after. And I've got multiple scenarios planned out, knowing all possibilities, because you know, this is a game of chess, right? There's only a certain amount of moves the market can do. Accumulate, reaccumulate, distribute, and redistribute. Obviously, if you don't know what they are, go and watch my Wyckoff bootcamp, or of course, join the mentorship for everything in detail. But yeah, keeping in check of your emotions, because a lot of people don't focus on them. Like for me, when I trade, I don't even focus on the chart anymore. Obviously, yes, I have to look at the technicals, but I'm more focused on my emotional state when I trade, because we don't see these technicals as they are. Like a lot of times you'll trade and you'll think, oh my God, yeah, this is a good setup, but you'll go back and be like, wait, why did I take the trade? What was I thinking? You weren't. Your emotions were clouding your judgment. And how trading psychology works is it causes your emotions to think you're seeing a setup that's valid when it's not. So when I go to the chart, I'm focused on my emotions and my biological signatures to see if I'm projecting these things that I want to see onto the market rather than actually reading it for what it is. And you know if this is a problem for you, if you know you go back and journal your trades and you're like, what? Why did I take that trade? This trade wasn't valid. or you're sending it to your mentor and they're like, no, this trade wasn't valid, it didn't meet the plan, that's when you know your emotions are obviously affecting you. But remember, emotions don't always mean I feel happy, I feel sad. And I used to even think, no, my emotions don't affect me. But I realized that all humans are emotional based creatures. The only way you don't have emotions is if you're dead. It was the lack of the awareness of my emotions was the problem. You know, it's kind of like a fish, right? A fish don't know it's in water until it's pulled out of water. And it's the same thing here with your decision making. So for me, when I go to the charts, like, yes, I've got my technicals I look at, cool, my economics, great. But I'm focusing on myself and my keeping myself grounded and cool, calm, and collected to make sure I'm not projecting certain things onto the chart and I'm actually trading for what I see and I'm not being emotionally sucked in. But I hope you guys did enjoy this little breakdown on gold and silver. Obviously, we do have a Telegram community that you can obviously come in, you can learn from me. We've got over 400 hours of recorded content in there. We live stream multiple times a week. So if you want to join that, all the information is in the description. But with that being said, more content coming soon. Don't forget to subscribe, and I'll see you at the top from the top because the bottom is way too crowded. Sheesh.